What is up, fam? It's Peyton, and today we're going over chapter 3 of One Up on Wall Street, where we go over the question, is investing in the stock market actually gambling? Well, the short answer is yes, it is a gamble, but it's a gamble worth taking. Let me explain and try to flesh out this argument. Peter Lynch mentions a lot about the bond market and how it compares to stocks, but currently the bond market is not a viable option due to the fact that it doesn't even match inflation, so I won't cover it. The other topic I want to cover is savings, because that's a hot topic. Yes, savings is great, but only for emergencies. A rule of thumb is 3 to 6 months of needed expenses. The longer it sits in your savings account, the longer it loses value due to inflation. To give an example of inflation to my friends that might not understand it, is the Fed aims to have a 2% inflation rate. That means that each year where the Fed hits their 2% inflation goal, whatever you have sitting in cash or in your bank account is worth 2% less than you had the previous year. I'll draw it out. So if you had $1,000 and it's sitting in your bank account, after a year it's only worth $980. The following year, $960. Pending inflation stays at 2%, which a lot of people argue that it's much higher than 2% today, but we won't go over that. In the book, Peter Lynch said since 1927, common stocks have recorded gains of 9.8% a year on average, as compared to 5% for corporate bonds and 4.4% for government bonds. And this is outdated. Government bonds are much lower now. Yields go from 0.05% for 3-month bonds and a 2% return for 30-year bonds. That's crazy. If you account for inflation of 2%, you're either losing money or have not made any return on your investment. In spite of crashes, depressions, wars, recessions, and different presidential administrations, stocks in general have paid off 15 times as well as corporate bonds and well over 30 times better than treasury bills. And he goes on to say that yes, there are risks, but the risks have more to do with the investor not knowing what they are doing than different businesses you can invest in. And this is not Peter Lynch, so you can give me an asterisk on this one, but one of the best investment advices ever given was by Warren Buffett, where he talks about pitches in baseball. Link up here, check it out. But the concept is that investing, we are in the no strike business. We can look at pitch after pitch after pitch after pitch and not swing. We only need to swing at what is in our strike zone, what he calls the circle of competence. In other words, you don't have to invest in businesses you don't understand. Wait for businesses that are in your circle of competence, your personal strike zone. Going back to Peter Lynch, he said all you have to do is to have an amazing portfolio is have 6 out of 10 stocks be winners. D's get degrees in investing. That's super legit. In closing, clearly the stock market has been a gamble, but it's a gamble worth taking. And in the coming weeks, we're going to be getting taught by Peter Lynch on how to invest properly. If you want to take this journey with us, please like and subscribe. It will mean a lot. Also, if you have gotten this far, I'm also the CEO of an e-learning website where we're curating high quality education that has already been produced around the internet. We're going to put it in one central location. Check out this free course on what is the stock market. As always, I love you and I believe in you. Peace.